What is up, guys? My name is Hassan and welcome back, everyone. Before I show you guys what I have been buying and selling, I want to cover a breaking news. And before I do that, I'm just going to show you guys this is my $11,800 Robinhood Portfolio. And this one day, I'm up about almost $100. And then for the week, 1%. And then for the 1 month, pretty much 0.5%, I'm down. 3 months, I'm down 1%, and then for the year, I'm up about 15%, which is okay, because in December we had a big dip. All right, so the breaking news I want to cover, I'm going to head out to my announcements. And so Robinhood is introducing fractional shares. You can invest in thousands of stocks with as little as $1. I think this is great news, because it will keep Robinhood in the game. I have already seen few YouTubers leave Robinhood to join TD Ameritrade or a few of the other brokerages out there. And this will give people another reason to stay. So another thing that they will introduce is DRIP. A lot of you guys know about it. I'm just gonna give you guys a quick intro on how DRIP works. So I'm gonna take you guys to an article. And so DRIP is a dividend reinvestment plan, and it's a program that allows investors to invest their cash dividends into additional shares or fractional shares of that underlying company. For example, let's take Apple. Apple, say you have 20 shares of Apple, and they paid you, say, for those 20 shares, they paid you, say, $17. We're just making up an example. They paid you $17. So instead of giving you that cash deposit, what they do is they take that cash and they invest more fractional shares into the company. And now you will have 20.3 shares of Apple, which will actually help your compounding grow quicker. And you don't have to worry about it, because pretty much will be on autopilot. I personally will not be using DRIP, because sometimes those companies are overpriced. I like to buy companies at a bargain. And I just like to hold on to the cash until I see a value, and then I'll purchase those shares with my cash dividends. But I will be using the fractional shares, because if you look into my portfolio, some of my companies that I have are $200-300. Like, for example, 3M is $171, and then we got Nvidia $235, and then another holding, I got Broadcom at $324. So I have few companies that are at $200-300, and sometimes I don't have enough cash until I make a deposit. So I will be using the fractional shares. And I want to show you guys some of the takeaways of DRIP, dividend reinvestment plan. So one of the cool things about DRIP is that I actually called TD Ameritrade, is that when you use DRIP, you're able to buy shares directly from the company, and often they give you 1 through 10% discount. When I called TD Ameritrade, they said you get about sometimes around 5% discount in the market price. But there's also a downside to it. The downside is that when you want to sell it back, there's not as much liquidity, because you have to sell the shares back into the company. But definitely DRIP is not bad. All right, so now I want to show you guys the trades I've been doing, or the companies I've been buying and selling. And guys, if you haven't subscribed yet, make sure you guys hit the subscribe button. A lot of you guys watch my videos, all my videos, but yet you guys even comment on the video, but you guys don't subscribe, because I see that in my analytics. So hopefully I can earn your subscription. And guys, like and subscribe to the video, and it keeps me motivated and keeps the channel growing. And this is my 10th year investing, so like a lot of times I drop a lot of gems. Make sure you guys stay tuned and subscribe. So this is my buys and sales for the month of October and November, what I've been buying. So I bought on October 1st, I bought Nokia for $4.90, and then I bought, check this another company out, National Instrument. I bought 1 share You can see 3M, bought 1 share. Pembina is also a great company, a little bit risky. It's in the oil sector, but you guys should definitely check it out. VET, stay away from it, even though I get about like 10-12% in dividend. It's a monthly dividend. PBA is also monthly dividend, which is I recommend. Remember, when I recommend something, it's you have to do your own due diligence, not just solely off my opinion. Guys, remember, make sure you guys check out the description check out my disclaimer from the description. So Honeywell, solid company. J&J, 1 share. I bought another VET, 1535 average price. And then Nokia, I sold it. So when it's in red, that means that I sold it for a loss. And the reason why I sold out of Nokia is that one of my fundamental rules is that if a company cuts their dividend, I am no longer part of them. So they sell the company, they cut their dividend. It shows that there are so many things wrong with it. It shows the management has to make dramatic changes that it's not sustainable for them to continue paying the dividends. So once a company cancels their dividend, stops paying their dividend, that's when I say goodbye, see ya, and I'm gonna take my money and invest it somewhere else. Texas Instrument, another solid company. I actually made a analysis video on it. You guys should check it out. 118 is a great price. International, oh, I sold this. This actually should be in green because I made money on that. So IP, I sold that 6 shares, good company. Cisco, bought 2 shares, $69.90. Waste Management, you guys all know about that. Pfizer, 4 share. Abby, I sold out of it. The reason why I sold out of it is that their acquisition they're taking a lot more debt into the company, and Abby is getting a lot more news, a lot more analysis. People are paying attention. So when a company gets hot, that's when everybody starts buying into a company and starts hearing about it, that's when I sell, because I think that the company is getting way too overvalued or there's too much going on. So usually when no one is talking about it, when no one is buying a company, that's when I buy. And when everybody's talking about that company and then when everybody's buying, that's when I pull out my profits and move on to the next company. And also they have a high debt. So I sold out of it at 85.15, made a good profit. Another company I'm buying is Pets. I also made a stock analysis video on this. Texas Instrument, another share. PBA. Colgate, I bought 1 share. I'm watching it. I want to actually buy more Colgate. GIS, sold out of it because of their high debt. Anything that has high debt, I try to stay away from them. And then another company, Skyworks Solution, 1 share at 98. I think they're currently at like $112 or something. And then PBA, I bought for around $34.95, 1 share. And that wraps up my buys and sells. You can see that this month I actually have 4 sales, which is a lot. I normally don't try to sell unless I have to. And you can see that there's a lot more buys and sells because I'm still trying to grow my account. So next thing I want to show you guys, which is my monthly deposits I've been making. And you can see it here. And it's showing you guys for the last 7 months how much I've been depositing money. And this graph you guys see right here, it's as important graph as my dividend tracking sheet that I show you guys in my other videos. I'm trying to increase my passive income. So adding money or constantly adding money is one of my fundamental rules in growing my portfolio. So in May, put $655 into this account, June $175, July $300, August $480, September $240, and then November, and then my average is $362, which is actually okay, but my goal is to actually have $420. So if I have $420, it will give me a total of $5,000 invested in 1 year. And I think that that's a good amount, or at least a start for me to invest. And I'm trying to increase my passive income. And for me to do that, I need to be constantly adding money, constantly need to average in, lowering my average cost or buying winners to grow my dividend income. And by doing that, I need to have more cash into my portfolio. So I want to cover a question. And the question is, one common question that people have is that how much money should I have in my investing portfolio? I think that the minimum you should have is based on your income. For example, if you make 55K, a year, your investment portfolio should be at least 55K. Your account should have at least 55,000. And if it's not there yet, you should be adding money as quickly as possible to reach that goal. And once you reach that goal of say 55K or which account portfolio that matches your yearly income, you'll start noticing a significant amount of difference. You'll start noticing a significant amount of dividend coming into your account that is meaningful and impact your life. Because if you're getting, say if you're making $150,000 and you're only making $10 a month in dividend payment, it doesn't really matter. But if you have making $150,000, but you're making, say, you make $150,000, but you're making $5,000 in dividend income, which is a lot of money, you start feeling it. It'll be more significant to you. So to answer that question, you should have, your portfolio should be equal to how much your yearly salary is, at least, and that should be a start. Guys, if you haven't subscribed yet, subscribe. And this is my $11,800 Robinhood portfolio. And as always, thank you. Hit the like button. See you next time.